So there has been a strong recovery in the Indian market from the March lows. However, not every sector or stock is participating in this rally. That's where I spent some time trying to understand the current state of market. And what stood out was quite interesting. Momentum is not broad. It's very concentrated. There are specific pockets where money is clearly flowing. And that's where the real leadership is coming out. And now with Q4 result season underway, it becomes even more important to track these leading sectors and key stock within them. Because that's where most of the action is likely to be. I know a lot of you may not get enough time to track every result or sector closely. So in my weekly series, I break down the key updates and trends that actually matter for an investment point of view. I also maintain an Excel tracker where I track nearly 200 companies. For more details, you can explore my website or join button of this channel. So in today's video, let's identify those sectors and stocks that are showing strong momentum in the current market. However, there's one catch with these momentum companies that you must know before investing your money. We'll also discuss in the video. Alright, let's get started. So first sector that is showing clear momentum is power sector. And more importantly, it's not just limited to one or two stocks. You are actually seeing broad participation across the sector. Now, if you look at what is driving the power sector rally, they are actually both structural as well as near-term drivers. Structurally, power demand in India is going through a shift. It's no longer just industrial or residential growth. We are witnessing a massive shift from petrol diesel to electric vehicle, and that requires huge electricity. Then another massive growth driver for power sector is data centers. With AI, cloud and digital infrastructure expanding rapidly, data centers are becoming a massive consumer of electricity. In fact, Indian government is also focusing on making India a global hub for cloud and AI infra. At the same time, there's also a near-term trigger playing out. With the ongoing tension around Iran and broader Middle East, global energy markets have become quite volatile, which is already pushing up the concern around fuel availability and cost. This kind of external uncertainty only makes the energy security more important. So what you are getting is an interesting combination: rising demand on one side and supply side uncertainty on the other. Now the question is, how do you participate in the power growth story? Which companies are showing strong momentum? So individually, if you look at it, there are multiple companies. For instance, you have NTPC, where the stock is showing strong momentum. Even Coal India is looking very interesting because you can't ignore thermal power. It is still a crucial part of India's power ecosystem. Then Power Grid is looking very interesting with sharp recovery from January lows. And the interesting part is, all these three companies are also good dividend payers. Then you have Tata Power as one of the few vertically integrated power company that is involved in power production, transmission, as well as new age energy solution. Its stock is also showing strong momentum. I recently discussed Tata Power business in detail, so if you want to deep dive, do watch that video. Apart from this, even renewable energy space is looking interesting. For instance, Waaree Energy has also recovered from the lows. Then second sector or theme that is showing strong momentum is data center. That's a no-brainer that with growing digital usage, data consumption across the world is simply exploding. On top of this, the demand for data center has been fueled by AI growth story. For instance, in 2026 alone, hyperscalers have committed investment worth $600 to $700 billion in AI infra. That's massive. And many companies have committed billions of dollars of investment in building data centers in India. No wonder data center related stocks are witnessing massive demand, which is reflected in the earning growth and eventually in their share price. Now recently I've done two detailed videos on data center value chain and top stocks within each value chain. I'd strongly recommend watching those videos to get a proper understanding of role of each company within the value chain. If I had to pick top companies from data center theme that are showing strong momentum, first would be Hitachi Energy, then I would pick ABB India, then you have got Siemens India, Cummins India, Thermex, CG Power, Polycab, TD Power, and you've got Netweb. Now if you look at the earning growth of these companies, it's very solid. Hitachi Energy trailing 12-month profit have zoomed 181% and stock price is showing strong momentum. Then ABB India earnings have compounded at 50% CAGR rate in last 5 years. Its stock price did jump a lot, but there was a solid correction and consolidation. But the stock is again back in action. Then Siemens earnings have been disappointing and stock price also corrected sharply after a solid rally. However, again there's a sharp rally from March lows. Then Cummins India, 3-year profits have compounded at 35% and share price is consistently on uptrend. Then CG Power profits also jumped a lot in last 5 years. While there has been a slowdown in growth recently, its share price was consolidating for a long time, has recently given a strong breakout. Then you have cables and wires space where companies like Polycab are doing exceptionally well, which is again reflected in the share price. Then look at TD Power. Its profits have compounded at an exceptional 56% CAGR rate in last 5 years, and the share price continued to remain in momentum for a long period of time. Finally, you have got Netweb that has compounded profit at 96% CAGR in last 5 years and share price has also exploded. Although there was a good correction and consolidation, but again the stock is showing uptrend. So considering the price volume action and the ongoing investment in AI theme, data center related companies are well positioned to benefit. Having said this, the only challenge is high valuation. Today, all data center companies command a very high valuation. Now, as long as earning growth is sustainable due to AI boom, these companies will continue to command a premium valuation and remain in momentum. But you need to be careful in terms of exiting before the momentum fades. By the way, in case you are not comfortable with individual stocks or confused which stock to pick, you can also explore power related ETF. Although there are not many ETFs, I could see one power ETF offered by Grow that covers both power and data center related stocks. Then third sector in momentum is defense and aerospace. This is one sector that has already seen a sharp re-rating from last 2-3 years. But even now, the strength is holding. The reason is simple. For a long time, India relied heavily on imports for defense equipment. But over the last few years, there has been a clear shift towards indigenization with more domestic manufacturing, higher local sourcing, and a push to build capability within the country. Government has already banned the import of many defense items. Also, the fact that earlier this was largely a domestic story, but now some of the defense companies are starting to tap global market, which adds an incremental growth driver. Again, I've already discussed the aerospace and defense sector last year in detail. Now here also the rally is across many stocks. For instance, you have Bharat Electronics that is showing a strong uptrend. Then look at Bharat Forge. It's again a company that is diversifying from auto business to defense and already has a very strong order book. Its stock price is showing strong momentum. Then next you've got Data Pattern that is compounded earning at 59% CAGR in 5 years and 30% CAGR in 3 years. Its stock price consolidated after a sharp rally, but again there's a strong price volume action. Then you have Azad Engineering. Its stock price was consolidating for a long time, but recently there's a strong recovery from the lows. Then MTAR is another company that is in strong momentum. I used to track this company very closely in the past, but I lost confidence on management where they overpromised and underdelivered for many quarters. But now it looks like the growth is back. But yes, the valuations are insane. And that is the catch with entire aerospace and defense sector. You don't have valuation comfort. All these stocks are trading at very high valuation. So good for momentum, but you need to be cautious. Again, if you're not sure on which stocks to pick, there are few defense ETF that you can explore. By the way, if you want to pick one stock that is at the intersection of all these themes, including data center, power, defense, infra, it would be L&T. If you simply go through the kind of work they do, not just in India, but across the world, it will blow away your mind. So L&T is the best proxy to play the overall CAPEX story. Of course, it's a mega cap company. The next segment that is looking interesting is auto and auto auxiliary. This is slightly different from what we have discussed so far because unlike power or defense, where momentum is broad and structural, in auto, this momentum is more selective. For instance, EV is a strong theme within auto space. Companies like TVS Motor and Ether Energy that are leading the two-wheeler EV sector in India are doing very well, which is clearly reflected in both the share price. Then there are a few auto auxiliary companies that are looking very solid. For example, you've got Sansera Engineering, which is doing exceptionally well. One of the reasons is due to its diversification into the aerospace, defense and semiconductor sector. Company is sitting on a massive order backlog and the growth has been super strong in this division with very high guidance for FY27. Then another interesting pocket where we are seeing momentum is capital market space. So capital market companies follow the stock market. When the market participation is strong, trading volume is high and capital market companies outperform. We have seen this in the last bull rally. However, it's been a long time since the market has been in dull phase. and hence many capital market companies have seen good correction from the peak. But there are still some selected names that are doing well from this space. For example, companies like BSE has been consolidating for a long time and now there's a good price movement. Then Anand Rathi Wealth has also seen strong momentum after a solid set of Q4 result. Another very interesting company that sits at the intersection of platform play and capital market is Grow. It has recently declared solid Q4 results and stock has been in strong momentum. Again, the catch is valuation comfort is missing in these companies. Now moving on to the next sector, you've got financial sector. Again, a space where momentum is visible but not across the broad spectrum. Similar to capital market, the rally here is quite selective. For example, PSU banks like SBI, Union Bank of India, Bank of Maharashtra have seen strong traction due to improvement in asset quality, lower NPA and better capital position. Within private bank, AU Small Finance is looking quite strong. Then Federal Bank is also looking promising. Even Karur Vysya is showing a lot of strength. The reason for momentum in these mid-tier private bank is due to strong retail franchise, better growth visibility and improving return ratios. And finally, you have CDMO theme that is looking very solid. Now earlier, big pharma companies used to do everything themselves. Research, develop the drug and manufacture it. But now they're increasingly outsourcing a part of this work to specialized companies. These companies are called CDMOs. They help in developing the drug and then manufacture it at scale. Now why is India benefiting from this? So there are a couple of reasons. First, global pharma companies want to reduce their dependence on China. And second, India offers a good mix of lower cost and strong chemistry talent. Also, over the years, Indian companies have improved their capabilities, so they are no longer just making basic drugs. They are working on complex molecules and high-value products. For instance, Laurus Labs is a strong beneficiary of CDMO theme, and stock price is also in strong momentum. Then look at Acutaas Chemical, earlier known as Ami Organics. It is another very interesting company within CDMO theme. Earlier, it was mainly into pharma intermediate, but over time, it has also entered into specialty chemical space and CDMO work. And stock price has shown strong momentum. Then another promising company is Newland Lab. It's a pure play CDMO company where instead of selling standard pharma product, it works closely with global clients to develop and manufacture complex molecules. So the growth here is driven by capability and long-term contract, not just by volume. But similar to other momentum companies, the valuation comfort is missing in these CDMO themes. So if you look at all these sectors together, one thing becomes very clear. The market right now is not moving in a broad-based manner. It's not like every sector or every stock is participating in the rally. In pockets like power and data center, the momentum is relatively broad-based. You are seeing participation across multiple companies because the underlying drivers like rising power demand, AI, digital infrastructure are quite strong and structural. But beyond that, in sectors like defense, auto, capital market, financials, or even CDMO, the story becomes much more selective. Only certain companies are showing strength, which are those with clear earning visibility, strong order book, or specific trigger. And then on the other side, you've got sectors like IT that are clearly struggling. The growth is missing and AI disruption has created massive uncertainty in the near term. Although the valuation in IT companies is very attractive now versus the historical median across your large, mid and small cap space. But due to AI related uncertainty and lack of earning growth, IT sector is clearly looking weak at the moment. So this is not a market where you can just buy a sector and expect everything to work. You have to be far more selective. And that brings me to the most important point. The catch with momentum stock is, let me be very honest, most of the companies today that we have discussed are trading at premium valuation. As long as earnings continue to deliver, the momentum can sustain. But the moment growth slows down or expectations are not met, these stocks can correct sharply. So while the opportunity is clearly there, discipline becomes equally important. And since we are in the middle of Q4 result season, this becomes even more critical because this is the phase where actual numbers will start validating or challenging the current momentum. So keep a close watch on result, management commentary and guidance. And if you don't get enough time to track everything in detail, you can follow my weekly series where I break down the key updates that actually matter from an investing point of view. And of course, I track everything in an Excel tracker where I also update the comments so that you can decide where is the opportunity. You can get more details on my website or join button of this channel. So overall, the market is giving opportunities, but only in specific pockets. Now you tell me in the comment which sector or stocks you find most promising in this current market setup. And if you find this video useful, do share it within your circle. Also, let me know if you want me to deep dive into a specific name. I'll see you next video. Till then, take care.